Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 1st, 2025, and we're diving into Crown Castle's first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Crown Castle, a leading provider of communications infrastructure, has just released its Q1 2025 earnings. This report is particularly interesting as it includes the impact of their strategic decisions, such as the sale of their fiber business.
Revenue and profitability overview. Let's start with the top line. Crown Castle reported site rental revenues of $1.011 billion for Q1 2025, a 5% decrease from last year. John, what are the key factors behind this decline?
The decline in site rental revenues is primarily due to a $57 million decrease impacted by Sprint cancellations and reductions in amortization of prepaid rent and straight-lined revenues. Despite this, the company managed to achieve an adjusted EBITDA of $722 million, showcasing their operational resilience.
And what about their profitability metrics?
Net income took a hit, recording a loss of $464 million, largely due to an $830 million loss associated with the sale of their fiber business. However, their AFO per share remained relatively stable at $1.10, indicating strong cash flow generation from their core tower business.
Strategic initiatives and market position. Crown Castle is undergoing significant strategic changes. Can you elaborate on their recent initiatives?
Absolutely. Crown Castle is in the process of selling its fiber business for $8.5 billion, which will allow them to focus solely on their tower operations. This move positions them as the only public pure-play tower company in the U.S., which they believe is the best market for tower ownership.
How are they planning to use the proceeds from this sale?
They've revised their capital allocation framework, which includes reducing their annualized dividend to $4.25 per share. This strategy aims to balance shareholder returns with financial flexibility and strengthen their balance sheet.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 96 cents for Crown Castle. How did the actual results compare?
The actual EPS came in at a loss of 107 cents, missing the forecast significantly. This was primarily due to the $830 million loss from the fiber business sale, which heavily impacted their net income.
What does this mean for investors?
While the EPS miss is concerning, it's important to note that this is a one-time loss. The core tower business remains strong, and the strategic shift could lead to long-term value creation.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. How is Crown Castle managing its costs?
They've reduced selling, general, and administrative costs by $21 million, thanks to staffing reductions and office closures. This cost management is crucial as they navigate through their strategic transition.
What about their financial outlook?
They maintain a strong balance sheet with $5.3 billion available under their revolving credit facility. However, they do face $2.1 billion in debt maturities over the next year, which will require careful financial management.
Key takeaways. In summary, Crown Castle's Q1 2025 results reflect a challenging quarter due to strategic shifts, but their core tower business remains robust. The sale of their fiber business is a pivotal move that could unlock significant value. John, any final thoughts?
Investors should keep an eye on how Crown Castle executes its pure-play tower strategy. While the immediate financials show a loss, the long-term prospects look promising if they can capitalize on their market position.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Crown Castle's performance in the comments below.